Welcome to this explainer. We're jumping right into one of the most, honestly, game-changing concepts in the entire world of finance and high-stakes decision-making. We're going to unpack Mark Douglas's legendary principles on mastering the psychology of trading. Look, if you've ever felt like you're literally your own worst enemy when real money is on the line, well, this breakdown is made exactly for you. We're going to map out exactly how top-tier professionals completely rewire their brains for long-term success.
I want you to really think about this for a second. Why do traders with absolutely perfect strategies still manage to blow up their accounts and lose their money? It is incredibly frustrating, isn't it? You can spend hundreds of hours backtesting a brilliant system. You know exactly where your entry and exit points should be, and yet you still blow up the account. We've all felt that sting. You know exactly what to do, but you just sit there watching helplessly as your portfolio bleeds out. So what is actually going wrong here?
Okay, let's dive into this, because this right here shatters a massive myth in the trading world. Most people, and most books for that matter, focus entirely on technical analysis. They want the perfect charts, the holy grail strategy that's going to magically predict the future. But Mark Douglas throws all that out the window. He argues that the primary reason traders fail isn't a bad chart, it is entirely psychological. It's a lack of emotional discipline. You could literally have a highly profitable system, but if you don't have the internal discipline to actually execute it properly, you're going to consistently lose. Period.
Section 1. The real reason traders fail. Because it really is a crazy paradox that someone can possess an excellent money-making system but still lose consistently just because they lack the emotional discipline to see it through. Let's get into it.
It's a totally fascinating problem. How can you have a proven system, sit down at your desk, and then actively make choices that you know will lose you money? Well, the answer is what Douglas calls the mental gap. And I want you to view this mental gap as the main villain of our story today. It's that brutal, incredibly frustrating disconnect between what you logically know you should do and the action you actually end up taking when the heat is on. It's like having a strict stop-loss set in your plan and then just totally ignoring it the second the market moves against you, simply because you can't stomach the pain of being wrong.
And you know what's driving this mental gap? Deep-rooted human emotions. We're talking fear, greed, overconfidence, and that desperate burning desire to just be right. When we let these emotions take the wheel, everything falls apart. We start treating the market like it's a personal enemy out to get us. We tie our own self-worth to individual trades, and the very moment your ego gets tangled up with a fluctuating stock price, you inevitably start making irrational, emotionally driven decisions that absolutely destroy your capital.
Moving right along to Section 2, Bridging the Mental Gap. Let's talk about the concrete solution and how we actually fix this problem. To fix it, we need a complete paradigm shift. Ask yourself, if we can't predict the market, how do we actually profit from it? See, our brains are hardwired to crave certainty. We want to guarantee that if we buy a stock, it's definitely going up. But the market, it absolutely does not offer certainty, ever. So to bridge that mental gap, we have to completely pivot away from this need for absolute certainty and instead step into the much more powerful realm of statistical probability. Which brings us to Section 3, the 5 fundamental truths. Moving to a probability mindset requires us to deeply internalize some very specific rules. Douglas argues that just casually reading about probabilities isn't going to cut it. You have to deeply, completely internalize them. And there are exactly 5 of them. Just 5 fundamental truths that separate the amateurs blowing up their accounts from the heavy hitters who consistently extract wealth from the markets year in and year out. These 5 truths are the literal foundation of what it means to trade in the zone. Now, what's really interesting about this slide is how incredibly simple these 5 truths look on the surface, but how wildly difficult they are for our human egos to actually accept. 1. Anything can happen. 2. You don't need to know what happens next. 3. Random distribution of wins and losses. 4. An edge is just a probability. And 5. Every moment is unique. Let's break these down to see exactly how they rewire your thinking. So, starting with truths 1 and 2, this is how we reframe everything. On a micro level, meaning on a trade-by-trade basis, the market is completely unpredictable. Literally anything can happen. But on a macro level, consistent profit comes from executing your defined strategy over a large series of trades. You absolutely do not need to predict the outcome of one single isolated event to be profitable. Let me tell you, once you let go of that desperate need to predict the very next tick on the chart, it is incredibly liberating. Let's put this into perspective. Imagine you have a highly profitable strategy with a 60% win rate. That's a great edge. But even with that massive advantage, the actual sequence of those wins and losses is completely random. You could easily hit 5 of those 40% losses right in a row. Now, if you're stuck thinking in absolute certainties, you'll panic. You'll abandon your whole strategy. But if you're thinking in probabilities, you just calmly accept that those losses are literally just the statistical cost of doing business on the way to your 60% win rate.
And that flows perfectly into Truth 4, where we have to completely redefine what an edge actually is. We have to strip away this fantasy of guaranteed slam dunk wins. An edge is nothing more than an indication of a higher probability of one thing happening over another. That is it. It's not a magic 8-ball. Think of it like a casino. The house has a slight statistical advantage, right? They don't sweat losing an individual hand of blackjack because they know their edge guarantees profit over thousands of hands. Finally, Truth 5. Every moment in the market is utterly unique. This is so vital. Just because a chart set up right now looks exactly like a big winning trade you took last Thursday does not mean it's going to do the same thing this time. The market participants are different, the global news context is different, the liquidity is different. Recognizing this is exactly what stops you from getting dangerously overconfident just because you spot a familiar pattern.
Section 4. Entering the trading zone. This is where accepting all these probabilities leads to the ultimate application of the theory.
This is where the theory turns into high-performance execution. To enter this zone, you have to take absolute, uncompromising responsibility for your outcomes. The best traders in the world do not point fingers. They don't blame the market, they don't blame some random news drop, and they definitely don't blame their broker when they lose. And on the flip side, they don't chalk their success up to pure luck either. They own the whole shebang completely.
So, the crucial point is this. Absolute responsibility requires total emotional detachment. You have to fully accept the inherent risk before your finger ever clicks that buy button. If you've fully accepted the risk up front, you can detach emotionally from the results of that individual trade. Why? Because you already know it's just one tiny data point in a much larger statistical series.
A state of mind completely free of fear, hesitation, and regret. When you finally internalize all of this, you enter what Douglas calls the zone. This is the ultimate sanctuary. The mental gap is officially closed. You aren't fighting the market anymore. And way more importantly, you aren't fighting yourself. You're just flawlessly executing your edge and letting the probabilities do the work.
I want to leave you with a final, really provocative question to think about before you open up another stock chart. Ask yourself, and be honest, are you actually trading the market in front of you, or are you just blindly trading your own unresolved emotions? Remember, mastering the market always starts with mastering your own mind. Thank you so much for joining me on this explainer, and I really hope these insights help you find your zone.